Hi there and welcome back. Are you tired of watching your hard-earned money being eaten away by inflation, not growing, just kind of sitting there in your account? Are you tired of getting your pay slip on a weekly basis, a monthly basis, and watching a chunk of your money just being taken away?
My God, why?
Well, today we dive deep into the world of ISAs, where not only can you grow your money, your passive income, but how you can do this in a way that's tax-free. So make sure you stick around to the end of the video. This isn't one you're going to want to miss, and be sure to hit the like and subscribe button. And with that, let's get right into it. Now, to start off, an ISA stands for an individual savings account. So essentially this is an envelope that you can put your money into, and anything you earn on that money, so this could be, let's say you've got an ISA at your local bank, any interest you earn on that money, you do not pay tax on. If it's money that's invested, and let's just say it goes up in value, you don't pay tax on that. You don't pay income, you don't pay capital gains tax. Any money that's invested in one of these ISAs, you don't pay tax on the money you get back. So the main rule across ISAs in general is it's a £20,000 a year sort of allowance. So from April to April, the maximum you can put into all ISAs, any ISAs, is £20,000. Now this is a rule that applies up till April of 2024. So if you're watching this video after that time, then you might want to review and double check that is still the case, because it will change. Now, to cover the main types of ISAs, so there's a few different types. So starting off, the cash ISA is probably sort of the simplest form of an ISA. So this is what's typically sort of offered by your banks. So you set the money aside in this ISA and they'll pay you interest on that money. So the best at the minute, I believe, is by Synergy Bank. They offer a cash ISA at 4.55% return, essentially meaning any of those returns you wouldn't have to pay tax on. The next type is your stocks and shares ISA. So this is more for those that are focused on, well, stocks and shares, but sort of like your dividends, your trusts, your funds, but it's more for that type of investor. So these are commonly offered by brokerages. So that's such as Trading 212, Vanguard, as a way to invest your money and to not pay tax on the actual returns you make from it. Now, just as a note, with buying UK shares, there may be a negligible sort of amount of stamp duty that you've got to pay when you're buying shares in some circumstances. So the next type is a lifetime ISA. So a lifetime ISA is for you if you're sort of from the ages of 18 to 39. It's typically used for saving for later in life or buying your first home. So this ISA is just a little bit different in that you have to be invested in it by the age of 40. You have to be over 18, but there's a £4,000 a year limit into how much you can put into it. So obviously with that, you've got your £4,000 and that does contribute to your total £20,000 a year, but you can only put £4,000 in this on a yearly basis. Basically, the government will top up what you put in with 25%. So if you put in 4,000, they'll put in another 1,000. Now you can see there's a very strong incentive behind this. So they are very strict about the rules and sort of regulations behind it. So I've included a link down in the description to read a little bit more into it. But essentially that money can only be accessed after the age of 60, or if you intend on buying your first home. But again, I'd read into the rules. There's a few ins and outs with it. Now you can withdraw that money sort of throughout the lifetime of the ISA, but there's a 25% penalty just in the, obviously if they do give you that 25% bonus and you don't follow any of the rules that are set out, then you lose out on that 25% bonus. And now for the fourth type of ISA, and that's an innovative ISA. So this deals in peer-to-peer lending, which essentially takes your money on loan and it gives it to investors or loans it out. Obviously there is higher risk to this because what if they don't pay, but there is also higher reward than your typical accounts. Another thing to bear in mind is junior cash and junior stocks and shares ISAs. So they work in a very similar way, but they're obviously for people who are under 18. They have to be opened and used by a legal guardian, and there is only a £9,000 a year limit into how much you can put into it. Again, this is up till April 2024. This is accurate as of now when it's being recorded. But when that child turns 18, it turns into a standard ISA account. So now let's split this out a little bit. So let's say you wanted to put £4,000 in your cash ISA, £8,000 in your stocks and shares ISA, £3,000 in your lifetime ISA, and £5,000 in your innovative ISA over the course of a year. This is something that can be done and split out over those different ISA types, but just make sure you don't exceed that £20,000 a year threshold. You can only have one type of each of account open as well, so don't have a cash ISA with one bank and another cash ISA with another bank as well, because you can only open one type per year. Now, if you decide to change providers as well, so if you open, let's say, a stocks and shares ISA with one brokerage, and then you want to open a second one and start using another one in the same tax year, that is also a no-go. So that is from April to April the following year. So now we've covered ISAs and how they can help you to maximize your returns in a tax-free way. So you have that starting point. Now for the next step. And this video takes you through how you can take your ISA account, you can start investing today to make passive income and grow your wealth. This isn't a video you'll want to miss. So give it a watch, hit the like and subscribe button. Thank you again. Goodbye.